They say never go long at a resistance and never short at a support. This principle applies perfectly to Nvidia right now. Looking at its recent candlestick pattern, we can see it's sitting in a very critical resistance zone, especially judging from its recent price action. It has been trading this way for over a year. Its price has been stuck in a range-bound structure, mostly hovering near the top of a rectangle pattern. Right now, its price has reached a key decision point, this major resistance area above. Can it break out? Can it set a new all-time high? As of now, we can't say for sure because it's currently right at that critical resistance zone. And in such a zone, we don't recommend going long here. Whether it breaks out or not, it's up to the market. Even though at this level, its fundamentals remain very strong, whether that strength alone can lead to a breakout is still uncertain. Judging from the current price action, it's clear that resistance at this level has made the market more cautious. So does this mean we should be shorting here? Just because it's facing resistance? That's not a good idea either. Even though the stock is currently moving sideways, you have to consider that technically it's also sitting on strong support. So shorting here doesn't have a solid setup either. There's no compelling case to go short here. That's why the market is showing signs of indecision. To the upside, it lacks strong momentum. There's no clear bullish breakout in sight. And to the downside, well, there's no obvious bearish catalyst either. So overall, this has led the market into a state of hesitation. From a technical perspective, it's clear that the MACD has flattened out in this region. Price is still rising, but at the same time, the MACD isn't hitting new highs. It's turning flat instead. That's a clear sign of deceleration, and because of that, some investors are starting to hesitate. Can it still move higher even with strong fundamentals? It hasn't shown a decisive breakout yet. There's no strong upward push at the moment to take out the previous high, so price action here has stalled. It's clearly hesitating. You can also tell just by watching the chart. It's been stuck in this zone for quite a while. Price keeps clustering here. Whether it can break out or not depends entirely on the market. That's why you should avoid going long at this point. It's clearly hitting strong resistance overhead. So with resistance ahead, how should we approach this? The key is to wait for a confirmed breakout. Recently, Nvidia also made a major announcement. It launched a GPU cloud service. So from a fundamentals view, why don't we short at this level either? Even though resistance is there and the market looks hesitant, that's still not a valid setup for shorting. Just because there's indecision doesn't mean you should go short. Fundamentally, it's still solid. For example, recently, Nvidia rolled out its GPU cloud platform. So what does this mean for Nvidia's future? This GPU cloud launch marks a major strategic shift. The chip giant is now aggressively entering the cloud computing market. Specifically, Nvidia's cloud service comes in two models. One model allows AI developers and companies to directly rent servers from Nvidia. This model was actually launched back in 2023. The other model is that NVIDIA partners with major cloud providers through its new customer service platform to build strategic relationships and offer GPU computing power to developers or companies in need. An ambitious vision for its future. What vision? That is, cloud and software services could one day generate $150 billion in revenue. Now that vision is starting to unfold, it's becoming reality. The main concern is that NVIDIA's GPU dominance could be misused to force cloud customers to rely on NVIDIA services within its own platform. This might trigger pushback from other firms and lead to regulatory scrutiny. So while entering the GPU cloud space has risks, NVIDIA is still pushing forward. Why take that risk? Because diversification is key for NVIDIA. Its business needs more stable growth drivers. Diversifying its revenue is becoming more crucial. Why? Because one-time chip sales aren't enough to shield it from macro risks and lower demand cycles. Only with recurring income like big cloud platforms, Apple services, or Tesla's robotaxi plans can Nvidia achieve long-term stability. That's why investors focus on certainty in future growth models and recurring revenue. It's key to higher valuation. That's why predictability matters most in long-term value. As an investor, what do you value most? Certainty, of course. And that certainty comes from a business model that generates recurring revenue. Nvidia is now moving toward that kind of model. That's why even though Nvidia has the highest growth rate among the Magnificent Seven, the market still gives it a relatively low valuation. It's seen as stingy. Why? Because Nvidia lacks a recurring income. Its chip business relies on one-time sales. Once a chip is sold, there's no further revenue from it, no follow-up income stream. So that means less predictability in earnings, lower certainty. That's why the market isn't willing to give it a higher valuation. The price stays conservative. But the situation is starting to change. This shift is already underway. Still, it takes time to prove itself. Short term, it won't show results. But long term, if it gains a foothold in cloud and stabilizes its model, it could completely change its revenue base. That would significantly boost its valuation. So right now, for those bullish on Nvidia's future, how should you approach it? Is it time to act? Will it break into new highs? That's something only the market can answer. We'll need to wait and see. Let price action lead. We can't rely on guesswork or hope. Let the market confirm it. Because the market is always right. Trade based on evidence, not opinion. Avoid emotional or blind decisions. Nvidia has one of the highest revenue growth rates among the tech giants. That's how it becomes one of the top players. Its rise reflects real strength. Becoming a tech leader wasn't by chance. It earned its place. That's Nvidia's hard-earned edge. That said, right now in this zone, especially here, the stock is stuck. It's been consolidating too long. Over a year of sideways price action here shows this range is a heavy resistance zone. The overhead pressure is clear. So at this level, we need to wait and let the market decide the direction and act accordingly. Then after the pullback, we will look to go long again. That would be a clear bullish setup. The bias turns bullish. Bullish indeed. Now, can we short at this level? Can we profit by going short? At this point, there's technical resistance. There's some pressure overhead. If it fails to break out, a pullback is likely. But recently, we haven't seen any clear bearish catalyst yet. So it's not a valid short setup yet. We will need to wait for the market to make that call. Unless the overall market shifts, like if the major US indexes start correcting, then stocks like this could pull back too. That would create a short opportunity. But if there's no trigger, shorting here would be risky. So unless the setup is clear, don't short blindly. Shorting now could expose you to risk. That's why even though the stock is hesitating, especially in recent days, it's clearly stuck here. The daily range has been narrow and choppy. Even Monday's strong session didn't rally much. It just got a little closer to the previous high, but that high hasn't been broken yet. It's just testing it, getting closer. Will it break through the prior high? We still have to wait for the market to show us. So for now, at this level, the takeaway is don't go long into obvious resistance, never go long right into a heavy resistance zone. Why? Because the odds of success there are low. You need to wait for confirmation. At this point, the market is in an awkward spot. It's a tough setup. There's resistance overhead, but strong fundamentals are still in place. So it's a very tricky position. That's why for now, we have to wait. We need a clear catalyst, either bullish or bearish, to break this deadlock. Only then will direction become clear. In the short term, it may continue to remain stuck here. It will likely stay indecisive, back and forth, back and forth. So at this point, while the market is still hesitant, we shouldn't try to pick direction. Let the market choose its path. Then follow the trend. Go with the trend. So at this level, it's quite tricky and quite uncertain. Even though it ranks second in the core tech group in terms of distance from all-time highs, it's very close. The first is Microsoft. It's also quite close to a new high, very close as well. Microsoft was the first to break to a new all-time high. Now let's see how Nvidia performs next. That's what we will watch. As for Nvidia's own performance, we need to let it show us the direction. We should never try to decide for the stock because right now there's no clear sign that it can break above its previous high. That signal isn't there yet, whether from the fundamentals or the technical side. Yes, fundamentally, as we just said, it's made some moves recently, but whether those moves are truly bullish still needs time to be confirmed. Real upside catalysts need time to prove themselves. Yes, Nvidia started planning early and its fundamentals, its revenues are solid. But in the end, the market still needs to choose a direction on its own. Only after a clear breakout will we turn bullish. And if structurally it weakens and moves downward, chooses the downside, then we will consider shorting it. Alright, that was our brief analysis of Nvidia's price action. We looked at how it's been moving and gave a general overview. If you have any other thoughts or questions, feel free to leave a comment below.